The US dollar has gotten weaker against a bunch of other currencies, so let's talk about it.
One metric you should be paying attention to all the time is called the DXY. That measures the strength of the dollar, and you could see just in the past few days, it dropped like a lead weight. The DXY measures the US dollar against a basket of other widely traded currencies like the British pound, the euro, the Canadian dollar, the Japanese yen. Take a look at my list of currencies. You could see how the dollar went down, but almost every other major currency went up aside from the Japanese yen and the Canadian dollar. Even though the Japanese yen did go down a bit today, you could see that it has been rising steadily against the US dollar since the beginning of 2025. Reason why is they've been raising interest rates, which have been historically around 0 or 0.25%. Because of that, it became very easy and cheap to borrow Japanese yen, so American firms and a whole bunch of other firms around the world would take these very generous Japanese loans, and then they would buy more speculative assets like stocks or even just bonds, and they would get a higher interest rate or a higher rate of return. Because a lot of these Japanese loans were highly leveraged, that means when the value of the yen goes up, there's a chance that these people who leveraged can lose their entire investment, so they have to sell a bunch of their other assets quickly to cover. The Russian ruble as well has been rising steadily against the dollar since 2025, but that's a bad thing too. Russia says the official inflation rate is about 10%, but other sources outside the country suggest it's between 15 to 20%. And interest rates in Russia aren't 0.5% like they are in Japan. They're closer to 20%. A stronger currency is generally good for exports, but Russia's main exporting partner is China, India, a bunch of other countries, and they are bending Russia over a barrel for a lot of discounts, so this isn't going to affect them so adversely as it will Russia. Very high interest rates are also internally bad for Russians because it makes things much more difficult to purchase. Now, China's currency in yuan is kind of in an economic limbo because their economy is suffering a lot of deflationary pressure. Now, generally, if you're facing deflationary pressure, you want to lower interest rates and maybe print a lot of your currency because you want money to keep flowing. But if the value of the currency gets too low, then it affects China's ability to import. So this is